the new financial guardrails, we still have 3 more years of this administration to make sure that all of these things happen. And when the Clarity Act gets through, it's another bipartisan vote that will create the clarity on the structure. And I think that will serve as a point. One thing just to bring up for what you said, and so people can start to feel good. The most optimistic thing right now is that sentiment is so brutal. When sentiment gets this bad, it's good. And so if I go back to the fiat world, I still believe that the public equity market is going higher. If I thought we were going to have a 50% correction in equities, I'd be worried about Bitcoin at 100, at 98, at 97. But liquidity begs liquidity into assets that are going to do well. And Bitcoin will eventually get its chance again. And it will have worn through a lot of overhead supply from whales while the distribution goes on. And I will say it again and again. I'd rather have 1 million people owning $1 billion than one person owning $1 billion. If you want a stable market with lower volatility and a true bull market, I think the innovation's there. I think the macro structure is there. The inequality is there. And I also think that we're at a point where sentiment is just a big positive.
Visser begins by emphasizing that Bitcoin cannot be viewed in isolation. It's not just crypto, it's a financial asset. And like every asset, it exists within the broader market ecosystem. He compares the current state of Bitcoin and altcoins to the post-dot-com era. After the tech bubble burst in 2000, it took nearly a decade for the NASDAQ to recover. Many speculative names died off, while the strongest, and like Google, emerged strong.
The concept of the IPO distribution, which I feel very strongly about, just in terms of thinking about what's been going on this year and just going back and putting it in the context of assets. And I think that's the one thing, whenever I speak with the community and I hear the frustration, there's always some correlation or some part of the asset market that fits into Bitcoin. And I mean, this goes with any IPO in general, meaning you can't separate the market from the asset. And in the case of Bitcoin, let's leave it alone as not crypto. Let's treat it as a financial asset. So the bond market's been garbage, which we know about. But I think if you break down the parts that are relative for Bitcoin and you go back and you go, okay, except for Bitcoin, what's actually worked over the course of the last 4 years inside the crypto space? The altcoins they're still not up to the highs as an index as they were back in 2021, 2022. And if you look at similar markets to the altcoins, you get into the VC world, you get into the private equity world, you get into the private credit world, you get into the commercial real estate world. All of those have been under some form of distribution and markdown for a while. So in theory, altcoins have actually done better. Bitcoin's obviously gone up during that period. So I just think whether it's 100 grand, whether it's 110, whether it's 95, whether it's 90 at this point, everyone needs to take a pause, take a deep breath. If you're in this for the trading side, there's still more selling that needs to happen. If you believe the numbers and you believe that about 10,000 people own about 33% of Bitcoin, you throw out Satoshi's number, you're still dealing with, 30%, 28% of $2 trillion. So if there was a true distribution, which I think there will be, I don't understand how it's hard for people to imagine that if you put $1 million into Bitcoin 11 years ago, I mean, you've gotten 1,000 times. You don't want to have 80% of your net worth in one asset. And so I think the distribution is happening. I really think people should go back and look at what happened after the NASDAQ bubble in early 2000 and how long it took. I mean, it took a decade to get back to the prior highs. And Bitcoin already took out the highs. So I'm separating it as it's a financial asset that needs to be part of people's portfolios. But the parts that it doesn't need to be part of people's portfolios, meaning the altcoins, the things that don't have institutional adoption, I still think this is related to a dramatic overhang on the illiquid markets that are having an impact on this space. And over the course of, unfortunately, the last 2 weeks, for people that wanted to see some kind of a bid, now you've had a dramatic fall in a lot of these non-profitable speculative stocks.
Describe this overhang of the illiquid market.
So again, I think people have underestimated how much money is in the illiquid markets from the VC world. And I mentioned this in the paper. You obviously had a bubble in crypto that peaked in the late 21, early 22 period, but you also had massive SaaS investments. So then rates go higher, that obviously hurts. But then AI happens, and artificial intelligence is an incredibly disruptive force, not just to public companies that aren't adopting to it, but in particular, a lot of those SaaS investments, like look what's happened to Salesforce.com and Adobe, public SaaS companies. AI has made SaaS a questionable investment place. And so when you have VCs that have a lot of investments tied into this, at the same time, you've seen the stories from the endowments needing capital and trading things at down levels. You've seen the problems that have shown up in first brands recently in private credit. You've seen the private equity public companies that have gone down. I think this overhang of illiquidity in there is driving people more towards the liquid markets. I think that's one of the reasons why the public markets have done so well in spite of that, because there are earnings that are growing, but that illiquid market doesn't get counted as much. It's one of the reasons why if I look a year out and everyone that's focused on the Clarity Act, tokenization is needed, and it's needed to bring real-time pricing. So one of the reasons that pension funds, endowments, insurance companies had invested in the illiquid markets was because there was no mark to market. So no mark to market is a good thing when markets are going higher and these things are just kind of getting new valuations. But when they're not getting up rounds, it's a problem. And I think the altcoins and all the investments inside the crypto space are going through what happened after the dot-com bubble. And let me get rid of the public markets. The VC market was hurt a lot too. And what happened was Google is probably the most famous and biggest of the IPOs that happened in 2004. And if you go back and look at, Google coming to the market, that was a big deal because they needed cash. They needed to deliver some liquidity out into the LPs. And I think that's a big part of what's going on. Now, I'm a macro person that spends my time thinking about what the world's going to look like in 5 years. So AI will continue to do two things for Bitcoin and for crypto that just keep me in the exact same path. And then I'll get into just kind of the near-term things that I think people should be looking at as part of this cycle. On the one side, AI is going to drive massive amounts of dollars into the new financial guardrails. So I don't think you can say Bitcoin and not connect it back to the innovation that will be happening. There's a reason why historically, stablecoin market cap was very correlated to Bitcoin. So if the market cap was going higher in stablecoins, you'd expect it to be happening in Bitcoin. Well, now we have the market cap going higher, but Bitcoin's not going higher. And I think eventually that will normalize and people will realize that the more volume and dollars that are going into stablecoins, the more that is the same function of what Bitcoin served. One of the things that happened with stablecoins, and I've listened to a lot of Brent Johnson in particular, if you haven't had him on.
Milkshake theory,
exactly. Well, he's recently done a report on stablecoins. And I think in a world where most people in Bitcoin say the dollar needs to weaken, he's actually making the argument on stablecoins that stablecoins are going to serve the purpose of something that I believe that initially Bitcoin was thought of. And that could mean the dollar goes higher and Bitcoin goes higher. And I think people have to separate these correlations. So I'm a big believer that the innovation that's coming from stablecoins, the network effects that are coming, the need for dollars to flow in the space eventually from the VC world, once they're freed up from what's gone on, will keep the innovation going. But you have to remember the other part that we've talked about this entire time, and now we've seen with the election in New York City, the job losses or the job pressure that comes from artificial intelligence continues the main theme that I always believed in Bitcoin. So when I came to the conclusion in my mind that Bitcoin was a part of the end game, I've referenced Joseph Schumpeter here every single month that we've spoken. Creative destruction, he forecasted that eventually we will get to socialism. Okay, it doesn't have to be at the countrywide level, but the reason that socialism becomes something is because people start believing that they need to have money handed to them. And that's because of the inequality that reaches a point that people want. They want fairness. Bitcoin is, at the end of the day, represented to me a new system where the democratization of a whole bunch of things happen. And the part of the democratization that goes on is in education. That comes with AI. AI and crypto are both democratizing forces, in my opinion, and they match up at the very end. So there has to be a new system. And with the governments embracing the new financial guardrails, we still have 3 more years of this administration to make sure that all of these things happen. And when the Clarity Act gets through, it's another bipartisan vote that will create the clarity on the structure. And I think that will serve as a point. One thing just to bring up for what you said, and so people can start to feel good. The most optimistic thing right now is that sentiment is so brutal. When sentiment gets this bad, it's good. And so if I go back to the fiat world, I still believe that the public equity market is going higher. If I thought we were going to have a 50% correction in equities, I'd be worried about Bitcoin at 100, at 98, at 97. But liquidity begs liquidity into assets that are going to do well. And Bitcoin will eventually get its chance again. And it will have worn through a lot of overhead supply from whales while the distribution goes on. And I will say it again and again. I'd rather have 1 million people owning $1 billion than one person owning $1 billion. If you want a stable market with lower volatility and a true bull market, I think the innovation's there. I think the macro structure is there. The inequality is there. And I also think that we're at a point where sentiment is just a big positive.
He also references Brent Johnson's dollar milkshake theory, arguing that stablecoins may paradoxically strengthen the dollar while also helping Bitcoin. The reason? Stablecoins expand dollar utility globally, even in places where banking systems are weak. And Bitcoin benefits from that expanding liquidity base. In other words, Bitcoin and the dollar don't have to compete. They can rise together, especially in a world driven by digital assets and tokenized economies.
I think one of the other components is like, should the United States get into the data center and the compute business? And, are they going to look at this as a national security issue? Is this all noise and people are just trying to figure out little things to talk about on a day-to-day basis, kind of like a soap opera? Or are there real things that are changing here that maybe are changing your mind about these AI stocks and kind of the broader trend?
Nothing is changing. I view the infrastructure story as a bit of a sideshow. It will get funded. A lot of it's going to be in debt. But it's the adoption that matters. I don't know how many times you can say that this is electricity and that the apps, the adoption, the businesses, the profit margins, it's all to come. We're still in the very early stages. We've only done the training side. The inference side just started this year and the adoption is growing. I know a lot of institutional hedge funds don't read the earnings report of Tesla or Palantir because they're overvalued. And so if they're not going to own them, and ownership from a hedge fund perspective is very low in those names. But if you go through Palantir's earnings that happened this week and you read the numbers, they're staggering. Forget the valuation. I just mean the adoption side. How many companies are now using Palantir? Forget the government. This is their enterprise, their commercial business. The numbers are going rapidly. The reason I kind of jump into that is the next phase. The AI agents, the digital employees that we talked about, which are already having pressure on businesses or on labor. That is the story. Whether people like it or not, if earnings per share are growing, then stocks are going to go higher, especially if the government is in a position, particularly right now, where they have to support the market. And I don't mean support it where they make sure it's going down. I actually mean making sure that the parts of the economy and labor, we're going into a midterm election. He's still got power to make sure once we get through the shutdown, I think the shutdown will lead to things happening. Once we get through IEPA and we figure out what is going to happen, because we're now in that uncertainty period. So I think people are getting nervous. But when you say AI stocks, and this is the thing that I really want people to know, I wrote something on this where it was connecting QE to adoption of AI. QE was hey, rates are going to be moved to zero, so you can go buy back your stock, which is earning 6%, and you can go borrow money at zero. It was financial engineering, the same thing that helped commercial real estate, the same thing that happened private equity, the same thing that happened VC, the same thing that happened all of that. Zero rates, the zero interest rate policy was a massive stimulus for the market. This stimulus is coming from artificial intelligence through profit margins. And again, it's a bigger stimulus if you go through and realize that if you cut expenses by 5%, you're getting the operating leverage. That's a much bigger number than the financial engineering that was going on for companies with buybacks. So I do think the expense reduction leads to just greater reality in the equity market. And here's the thing I'll tell people that have happened in the last 2 weeks. So if people are getting nervous about the bull market, number one, banks made new all-time highs in the last 4 weeks. Equal weight S&P. I keep hearing how bad the breath is. Equal weight S&P made new all-time highs last week. The S&P made new all-time highs. Global markets, it's a similar story, meaning European bank stocks made new all-time highs this week. When banks are doing well, that means the economy is fine, meaning credit might seem bad because we've got private credit going up, but if the banks are going higher, historically when we have bear markets, breath starts to weaken beforehand, yes, but you see that in equal weight S&P. That's not happening. At the same time, you see it in banks because their equity price starts going down while the credit spreads are widening. We don't have credit spreads widening. So I think everything is fine. I think this is another normal pullback. And I do think when we get through this one, the Bitcoin story will start to resume at that point.
Bitcoin isn't dying, it's maturing. The whales are distributing. The institutions are waiting for regulatory clarity. The illiquid markets are unlocking. And AI is paving the rails for a new, more transparent financial order.